let's start off with US earnings. Well underway at this stage. We are going to be seeing a spate of companies coming out with results, and I think that's basically going to be the key going forward from these levels, especially regarding risk aversion and risk appetite.
Yes, indeed. And, it's been a bit of a patchy start, frankly. I mean, we had the Alcoa results a week or two ago, weren't that wonderful. They were all right, but we've had a few others since then. We have to start seeing some indication of stability in terms of earnings growth. We're actually very confident about this. And just looking earlier at your preamble before we started the program, talking about the possibility of certain developed countries removing the stimuli before the companies are up, the economies are up and running properly. I don't think that's going to happen. There's still an awful lot of stimulus left in all of these countries. So I think we are going to see some reasonable earnings growth out of this little lot, and then in the next quarter as well. It's gathering momentum. I think that's the key thing, and we're not looking at a reduction in momentum by any stretch of the imagination at all.
Here in South Africa, it's all about the retailers. We had Clicks coming out with some numbers, sales up 10% rather for the 18 weeks to the 3rd of January. Some investors out there saying slightly disappointing. We also heard the CEO of Clicks saying that during the Christmas season, consumers still under pressure in South Africa.
Yeah. Look, in comparison with most other retailers that have reported up until now, this was probably by far the best set of results. It's very much in the fast-moving consumer goods arena, and in fact, last year they actually changed their sector. They went from general retailers to food and drug retailers, and that actually improved the rating. But that's exactly where they should be, because it is relatively low value in the main, low value added products, fast-moving, and I think that it's well suited to the kind of Christmas we've had, where people have been down trading, no doubt about it. So I think they've definitely picked up there. Look, there are a couple of incongruous inclusions there, notably Musica. It's something that for years I've said it really shouldn't be in the mix, and I suspect at some point in time, particularly once we get some dedicated broadband in South Africa, then the need for having a company like that may be less apparent. But as things go, yeah, one of the best retail results we've seen for a while.
You mentioned the drug aspect of Clicks. We know that they've got pharmacies in 220 of their stores out of 350, and they're also planning to expand even further and increasing their stores by 150. So that's about 20 stores a year is what they're targeting for.
Yeah. Look, the founder of Clicks, a guy called Jack Golden back in the 60s, he modelled it on the American drugstore concept. And it was only a few years ago that they were allowed by the regulators to actually go that route, to retail pharmaceuticals. And so it was tough. There were quite a few regulatory hurdles to surmount, first of all, but they have got first mover advantage. They are by far the biggest player in the arena. They've got buying power, they've got expertise, they really know how to do it. And yes, they're going to keep on rolling it out, and it's convenience, convenience, convenience.
Richemont also came out with some interesting numbers, and we know that sales increased to 1.6 billion euros, and was mostly due to, of course, the Asian operation. So luxury goods still looking very strong in that region.
Yeah, if you look at the segmental breakdown, we're talking about 31%, I think it is, of their sales coming out of the Asia-Pacific region. 41% coming out of Europe, but Europe's still looks like it's declining a bit. You're quite right. The Asia-Pacific side is the one area that's really pumping. It's an area that hasn't really been in recession at all. There's plenty of discretionary income to go around. And yeah, it's quite interesting to contrast and compare this set of results, this trading update, with what we saw 6 months ago. Johan Rupert then was really bleak, saying it was one of the worst period he'd ever seen in living memory. And now things have turned around. It just shows you things can turn around pretty quickly.
Truworths also came out with some numbers, so did Foschini. True is doing much better than the likes of Foschini. Looking at the comparison between the clothing retailers, the cash retailers, and the luxury good retailers, Chris, which would you be heading into right now? Which is your stock pick?
Yeah, I'm a little bit concerned about the credit retailers like Foschini and Truworths. Their results really weren't fantastic, and it's not unexpected. It's not their fault. It's the ambient background that we're talking about here. People still are not spending, even although interest rates have come down dramatically. Even Mr. Price, which is a cash retailer, relative pedestrian sales growth, about 8% up. So look, I think you've got to err a little bit cautiously on the defensive side. Something like Richemont, it looks like it's turned the corner. We like it. Look, it's a 22 PE. It's not cheap, but it looks like it's turned the corner.
It seems that we've got a few somber comments out of the retailers at this stage. We've got retail sales set to be released tomorrow, in fact. Chris, what are you expecting on that front? Because the previous reading, retail sales contracting by 6.5%. So this sector is still in dire straits in South Africa.
Certainly is. Probably looking at about -3, -4, and it's. We've been talking now about it getting to zero, getting into positive territory for quite a while, but it's just not getting there, unfortunately. And as I said before, you've had now over a year of profound and declining interest rates, and it's having little or no effect on consumer spending. Consumers are quite scared of spending. So unless and until we can get back to a situation of sustained economic growth where people are not fearful of spending, I think retail sales growth, unfortunately, is going to be in the doldrums.
Would you be suggesting another interest rate cut next week, Chris?
Oh, far from me to suggest that to anybody. I'd be very surprised if the governor went that route. I think it's more likely that she'll be a little bit canny on this one, and perhaps wait for a few months to see what the lie of the land is. You never know. You could see consumer spending springing back. There's definitely pent-up demand. So 6 months down the track, do you really, or 8 months or 9 months, do you really want to be putting interest rates up? So maybe they'll leave them on hold for a while.